Can you hear me now? Alright, I'm gonna start the stream over. Give me 1 sec. Alright. Can you hear me? Go make sure this is working now. Okay. Yes, perfect. Alright. Oops. Alright, so apparently whenever I plug my speakers in, it mutes my mic. So I can't do that. I'm just going to use the audio that's on the computer. Hold on, let me go over here. We are going to watch this video that Paul sent to me. I started watching it. I only watched half of it, and I knew immediately that we all had to watch this together. I have not fact-checked any of the information in this, although I do definitely plan to. So just be aware of that. But I do want to watch this all together. Actually, I think I'm just going to get rid of my face because we need to just watch this video. So, 1 second. Also, in the description, I linked this video so we can all watch it together. I mean, in case anybody is watching and wants to see the actual video and go like their video or subscribe to their channel. It was from Simulate and Trade. So shout out to you. So let's watch this all together because I started watching it and I was like, alright, we gotta watch this together.
But due to problems with my internet provider,
oh, wait.
I could...
Hold on, because I want to mute my mic so that you guys could actually hear this better. Let me know if you can hear this video good in the comments, please.
Couldn't deliver on that promise. However, I took that as an opportunity to redo this video, making the information a lot more digestible. Today's topic of debate is about finding evidence that links the Fed as an ape. Yes, you heard that right. The Fed is actually poking around, setting up transactions and deals that will leave it rich at the expense of the collapse of hedge funds. But if the government is not the neutral party in the market, what does that mean for GameStop and AMC? I think you are going to like the answer to that. Let's Tokyo drift into this matter without further delay. Credit Suisse has been making headlines again as of recent. They are reportedly still struggling with their loss of $4.7 billion a little over a month ago. It appears that they have not recovered from that massive blow, and chances of coming back are not looking all that well. The fallout of that scandalous hit has prompted many other institutions, including banks, to avoid wanting to do further business with them. This has led them to start temporarily barring clients from withdrawing out their investments and funds they have in Credit Suisse. Because of this situation, Credit Suisse is now considering having to hold bonuses for top performances until they manage to stabilize the ever-worsening situation. As if it wasn't enough, SoftBank has now pulled $700 million from the funds. You see, SoftBank was a massive investor to Credit Suisse, which led to a number of other companies to use that partnership as credibility to receive loans via supply chains at Credit Suisse. With recent reports confirming a lot of brewing conflict between Credit Suisse and SoftBank, Credit Suisse is losing a ton of clients. This story was visited to serve the tone of our next target, Goldman Sachs. Goldman Sachs is a vampire, and their transgression in destroying markets have been traced back as far as the Great Depression of 1929. They are well traced and reported as creating and accentuating bubbles only to burst them at the expense of everyone. They are well known for shorting stocks to death as well, and GameStop is definitely one of them. This week, when we saw GameStop and AMC start running, Goldman Sachs was reported as recalling everyone and seeing way out of the ordinary traffic flow, one of the key indicators that they are not in a firm position to manipulate and control the market anymore. Goldman Sachs is the one you think about when you want to start rehypothecating shares. Furthermore, their ties to OTC markets are further proof of their connection and part of creating the havoc that Wall Street is dealing with. In one of their investor resolutions plans, under the institutional client services part, they disclosed to their client execution activities related to OTC markets. OTC markets, for those new to the channel, are in regulated markets that have been found to the birthing ground where naked shorts are implemented in order to integrate them back to regulated markets. Now, Among the many problems that the government has in regards to the collapse of big institutions is that it needs to preserve an image. If the collapse of hedge funds scares future players in the private sector from investing as carefree, for lack of a better term, then the government might experience a new set of challenges. A more risk-averse private sector could lead to slower growth in the stock market and other economic sectors. As such, this is a situation that must be controlled systematically. Too big to fail. This term has been popularized as of late, mostly used as a cathartic expression of frustration against companies that can rule and act without facing real consequences. However, this term has a more implicit psychological meaning when in the context of general markets. Too big to fail functions more as a psychological state, one that more often than not works as a confirmation bias. So long as the private sector believes that the nature of transactions and investment risks can be modeled as a business expense, they tend to act more tolerant to making more riskier investments. This state allows for the bigger and rapid growth that the economy rewards and needs. Now, if for some reason, this impression of the market, too big to fail, is proven to be farce, what do you think will be the consequence on the recovery of a collapsed market? The recovery would be slow, and could even face stagnation for a period of time given the magnitude of the collapse itself. A private sector who does not place faith in the system that has rewarded its low risk tolerance will be much slower and less prone to provide the investments and therefore liquidity the economy will need in order to bounce back. And this is what births the recent surge in resolutions and proposals we have seen from the DTCC. They have taken action swiftly, passing amendments after amendments in a rushed fashion, because as the Joker said, upset the established order and everything becomes chaos. It seems to me that the Dark Knight movie explained the psychologically driven nature of the market. We are just now catching up to it all. So, DTCC has been orchestrating through the proposals, as we have discussed in previous videos, how things will go once members default on margin calls. And now, to tie it all together and make this more than just a tinfoil hat conspiracy theory, we have new reports that the Fed is collaborating with the private sector, architecting a plan to get mad rich to the brink in collaboration with its lifelong best friend, BlackRock. BlackRock is an investment management corporation. In fact, it is the world's largest asset manager, with $8.67 trillion in assets as of January of this year. BlackRock has a lengthy history of helping the Fed, ranging from buying bonds to now purchasing what could become, and I quote, a $750 billion portfolio of debt. Guess who is the largest institutional holder of Gamestop? That's right, it's BlackRock. There has always been a question as to who would be able to buy the assets given that the amount of naked shorting happening is so disproportional that banks and other institutions would not be able to buy everything and hence not fully realize the squeeze as it should be. Remember, the amount of naked shorting happening is ungodly. There are no words in the English language, and I actually did search, to describe the disgusting and putrid nature of the act that hedge funds have committed. The magnitude of the problem, this sort of hack that they found out where they print relentlessly without any regulation, is so serious that clearing them out could still be a problem. We have talked about the Fed pumping operational funds into the repo market, this week surpassing over $400 billion on the daily. We know that the Fed has been providing liquidity and keeping interest rates down to zero. I also know the Fed is well aware of the ongoing situation with hedge funds. I think they have purposely been delaying the squeeze so that the DTCC can enact its proposals and we can squeeze in fashion in order to not destroy the markets and, more importantly, keep the principle of too big to fail alive so that recovery can be a smoother process. Remember what the Joker quote, upset the established order and everything becomes chaos. Let me bring it all together once again. The Fed sees hedge funds enacting the naked printing as what they are, a cancer to everything. But there isn't much they can do. They simply have to roll with it. Or at least, so we thought. This new report that nobody is talking about puts 2 and 2 together. The Fed is collaborating with BlackRock. BlackRock aims to restore balance to an economic world destroyed by the parasites. We have proof that BlackRock holds and is increasing transactions of treasury bonds in reverse repo agreements. Let me break this down in easier words. There exists the repo market, a market where exchanges between institutions and the Fed take place. These repo agreements are made between parties for small fees and little to no risk. A hedge fund, for example, needs cash for the day, so they go to the repo market and make an agreement with a bank. They give them collateral, which let's assume is a treasury bond for this example, in exchange for cash with the promise to give back that cash and get the treasuries back and pay the bank a small fee. The transaction takes place, and this is considered a repo transaction. Reverse repo is the outlook from the perspective of the bank. They dish out and engage in loaning their assets without having need to, but do collect a small income from the fee they get from helping them out. So, the Fed as of late have been taking too much collateral out of the repo market. That is, they are buying off all the collateral and allowing too much cash, which is a problem because it distorts the balance of the repo market. They do this in order to keep interests down or close to zero. Citadel has been borrowing a lot of collateral, treasury bonds to be exact, from BlackRock. This is mostly due because of the absence of natural supply in the repo market since, as I mentioned, the Fed is hoarding them all. This puts Citadel in a bit of exposure. The more they borrow, the more they owe and the more exposed they get. We also know that BlackRock has a massive holding of GME stocks. What I think is happening is the Fed is collaborating with BlackRock to delay the squeeze by producing a ton of much-needed liquidity in order to allow the DTCC to finalize all the blueprints for the fall of hedge funds. Once everything is in place, they can simply let things get out of control without supplementing the demand for liquidity, and that is when things drastically get crazy. Literally, the Fed will launch the squeeze whenever they deem it appropriate enough. They can print unlimited amount of cash because they can do that without even batting an eye, and simply control the dormant bear that is slowly about to wake. So essentially the Fed gets a chance to fix some of the problems they have been creating, while also keeping inflation down. BlackRock will get rich off of the bonds and GameStop shares they have. I mean, I don't even think I can count that high. Retail traders get a portion of the cake, and Citadel is subsequently destroyed. And that is the greatest thing I can ever think of happening. This weird report from some foreign journalist has changed everything. The Fed is an ape, you guys. There could not exist any better news. There is no possibility better than knowing that the Fed is a fellow ape. They are working with us through BlackRock and perhaps other institutions to delay the squeeze, so it is even sweeter for everyone. They are the big ape, the papa ape, the snack daddy ape. I mean, it is quite literally over for hedge funds. When the government decided to teach you a lesson not by stepping in to stop you, but to bet against you and destroy you at the expense of everything you hold, that was the moment your days were counted. Gamestop and AMC are your tickets for financial success, but they are servient to the ever-powerful and megalomaniac arm of the United States. Don't mess with the Uncle Sam, bros. For us retards, these shares are rockets to the moon. For the Fed they are the whip to beat, strangle and dissolve the parasite. They let it grow and spread its confidence into everything, planning and waiting for the moment to strike them out into oblivion. I wish I could scream, because it's really all set in stone. And that is not everything. There are going to be other members, like Goldman Sachs, that will pay for what they have done. What does Goldman Sachs have to do with any of this? Well, to be direct, they are the ones that cause bubbles. As we discussed earlier, it is known that they are complicit in the abuse of GameStop and of AMC, and I do have proof of this which I will disclose to you in a minute. I do want to make it known that it is not only Goldman Sachs. I find them to be the scummiest when it comes to bank involvement, but JP Morgan and many other bigger banks have also been found to have ties directly to the massive shorting that has been taking place for so long. But Goldman Sachs in another type of evil. We briefly talked and described their role in shorting stocks and how they are the ones you go to when you need to rehypothecate shares. What you should know is that this bank has literally orchestrated and profited at the expense of the crash of foreign economies. They schemed to help Greece hide some of the debt it was accruing, and then turned around and doubled their debt. This investment bank has had footing in every single financial crisis since the 1900s. The problem for them is that they got caught shorting the wrong set of stocks and are now trying to quickly play catch up and save face, but they too have had to resort to option manipulation since they can't cover. In fact, I bet you are probably yearning for some good old numbers. Let's look at the last filings from Goldman Sachs and compare and contrast. They disclosed 31,000 call options for GameStop. By contrast, they disclosed having 206,500 put options at the same time. Now, I don't claim to be a mathematician, but 206,500 is a lot bigger than 31,000. This is closer to having 7 times sell pressure on the stock. Their AMC data suggests they have 340,000 call options, but their put options haven't been disclosed. I looked everywhere I could and found nothing. It's funny that the last date they disclosed having call options on AMC was back in May of 2018, and suddenly they disclose such a massive investment in AMC out of nowhere, especially when they had put options all the way until May of 2019. This sudden disclosure should tell you one thing and only one thing. Goldman Sachs is betting on AMC and boosting it up, to most likely then bet against it. I am certainly sure the put options disclosure will come out soon enough. I said on my last video they were boosting AMC and buying shares and options, and I got called out for apparently spreading FUD. This demonstrates and shows I was right. We have banks dropping billions of dollars on the fly to pump stocks and then drop them for a variety of reasons. One is to make newer traders scared of buying and holding, making the stocks so volatile that it makes newer investors afraid. I also see them doing this as a pump scheme to help raise some much-needed quick cash from those same new traders to then use it to place a ton of buy pressure. I bet you we see the put options count much bigger than the call options soon enough. I want to stress to you that we are entering real uncharted territory. Things are quickly changing and you need to be alert. Yes, buy and hold until we moon is your go-to mechanic, but you also need to know exactly what is happening everywhere because things are changing quickly, and the more you know, the better judgment you will be able to make on when to buy and what to expect. We have shills everywhere and the media is doing something drastic. Now, I know that you don't take the media seriously, otherwise you wouldn't be here watching this video about a stock you most likely wouldn't have right now, but it is crucial you don't skip this part of the video. I have now come to a full understanding of why the media is so keen on pumping article after article, piece after piece, creating a ton of FUD and fear. It's not to get investors to sell and hedge funds to cover, at least it's not the only reason. They are laboring hard so that their companies can actually buy cheaper. They are playing a bit of a different role than I initially though, as they too are betting against hedge funds and Wall Street. The way they operate is this. They short a stock or simply buy put options. After that, they then go and write negative editorials and post it on Seeking Alpha and other blogs, creating a lot of anxiety and fear. Since many actually do follow these websites, the stock typically will react to the negative articles by declining in price. After the floor is found or determined to be, these clowns go and buy the stock back, knowing that the negative news they posted will actually be rebutted. I know they have links to hedge funds, and I have seen posts created by hedge fund managers or people closely affiliated to them. However, what is to note here is that these independent companies act independent to hedge funds, and can bet against them low-key without creating product that creates conflict with the narrative that hedge funds want to push. The press can say sell and the hedge funds want you to sell. It's only that these companies and their owners will slowly be buying your shares and hold till they moon. After an incredibly bullish week, I noticed something. The media slowly start pumping articles after articles telling people to start buying GameStop and AMC, marking a shift in tonality that should have you scratching your head. After months of telling investors to not buy the stock, some are now changing stance and telling investors it's a good idea to buy our two stocks, but in particular AMC. Why is this? Well, it should be obvious given the data we just talked about. They want investors to buy in at the top of the peak in this small surge so that banks and hedge funds can drop the price and have you panic sell. It's obvious, everyone knows this. The part that nobody talks about is that hedge funds will not be the only ones buying those shares that paper hands panic sell. The press acts as an insidious ape and as a shill at the same time. It's very sickening and cynical, which is actually why they are so rich and I have to beg for Patreons. They employ and play both sides like Palpatine in disguise, and we remain eluded in the mist of misery, not trusting anything. Well, not anymore. Now you know what is up, the mist is uplifted and clarity is provided. The naysayers and doubters will come to the comments section to pass judgment and call me ignorant for saying the press is not working necessarily for the full profit margin of hedge funds. Well, it wasn't only me who discovered this. I am not smarter than the press, which should be as apparent more than ever at this precise moment. I have been blind for months. But I know the folk at Columbia University are smarter than them, and I came across some posts about it from multiple people. These guys know what they are doing. Hence why they work at prestigious institutions, and I just have a YouTube that barely gets views in comparison to my competition. This was a very big video that took me so many hours to complete. I actually got into a fight with some people as I bailed out and ghosted them for the sake of finding everything and putting it together nicely in a package just for you. I wanted to release the video last night when people went crazy on my Twitter after I teased it. I told you I was going to post it in an hour and then I didn't. My internet provider is apparently working for Wall Street and problems arose. They don't want you to know the things we talked about. They managed to cripple my Twitter reputation and I managed to still get the good due diligence to those faithful enough to still come check it out. I came across something interesting. I was notified that on Matt Core's livestream my channel was mentioned a couple of times as being many people's favorite. I cannot thank you enough for your support and kind words. I often compare my YouTube growth to other channels and get a bit embarrassed and feel a bit inadequate since some of them grow by the thousands each day. I sometimes wonder if I am doing something wrong, which is why I always welcome criticism and feedback. I am not much of a YouTuber and lack a lot of the charisma needed to charm you up and really blow up. But in those moments of darkness, I tend to go to the comments and see the pure love I get from you guys, and that shoots up my circuit board and my electricity bill. The gold, all the money from the squeeze will be nice, but the real treasure I have found in this venture is you guys. I am eternally grateful to all of you for showing so much support. I also want to thank my Patreons for their support. Nobody is forced to donate or pledge, but to the ones that do, and actually go above and beyond every month to support me, and that is just a feeling that I cannot describe. Words cannot express the gratitude I have for you, and trust me, I went through all my database. YouTube pays me scraps, sometimes nothing, much like the bonuses that Credit Suisse executives will get this year, zero. If you ever want to drop support, my Patreon is in the description. I also have Cash App if you don't care for continued support but want to show some love. I have 2 more videos in the making. Depending on how this one does, I will post one later today if views are crappy. If not, then I'll try to post both tomorrow. My entire following, though small, is wholesome. You are all just amazing. YouTube doesn't pump my content like others do to it, considering human voice is superior, but you guys do share my videos and I cannot thank you enough for doing that. I will see you soon, so go enjoy the rest of your weekend, and thank you again.
Holy moly, guys.
So it is my
Holy
great
moly.
pleasure to introduce to you somebody who really should not need much of an introduction.
Okay. Here we go. Alright. So, what do you guys... Well, I guess, Paul, you're the only one here. And I know you already seen it, but I'm sure everyone's going to look at this afterwards. I did link in the description the link to this video if you wanted to send it to someone or something. Again, the channel, dang, I forget. It's like, I don't want to say it wrong, but I said it at one point. What's up, Sky Trader? But I did say it at one point in this. I believe it's like, dang, I'm going to go look it up because I don't want to say the wrong thing. Hold on. Let me go look this back up because I forget already. It's called Simulate and Trade. Took me 30 minutes to find that again. Saw it last night. I'm really glad that you shared that with me, Paul. That was a fantastic video. You know what's so funny is what he was saying. I knew that there was something weird about BlackRock, like something super weird, and I could not figure it out. It wasn't that I didn't trust them, although I didn't, because I don't trust anybody, but I don't know. I don't know, obviously, if the things said in that video are real or not, but it is very interesting. Yes, we need to stick together and expose the manipulation. 100%. That is my only goal in this, is really to expose them and then make sure every single one of them go to prison. They need jail time. If this was me, if this was you or any of us doing this, we would all be in prison without even a second to even think about it. Without a second. They would jump on it and throw our asses in prison. They absolutely need to go to prison for what they have done. Paul's... What's up, Sky Trader? Paul said, and the fact that Goldman Sachs has been fucking screwing us over for how long now? Dude, I have looked up their violations, and they have so many violations. Like, I have literally never seen so many violations. They definitely have had their hand in every single pot, but, like, not even just that, but, like, basically, like, the entire bank is like completely fraudulent. Like, they do fraud is their number one business for sure. Merrill Lynch is another one. I have personal experience with Merrill Lynch, which is very interesting to know that like they were involved in such shady practices. I think that my issue is before all of this, I seen all the good in the world. I was completely blind to any like kind of bad. So like whenever this all first started, I invested anyway, even though I didn't 100% believe. And then I did paper hand after that big old drop, and then I bought back in at 40, and then I sold it eventually. I paper handed again. Well, after like I actually started digging into the due diligence, I never paper handed again. I've been holding strong. I have no plans to sell, literally. Even after the squeeze, obviously I'm going to cash in on the squeeze, but I definitely plan on being a long shareholder in GameStop literally forever. I am going to buy my child GameStop shares. I'm going to buy like my entire family GameStop shares because I really honestly believe in the company. And I think that they are a fantastic company. They were a huge part of my childhood as well. But I just think that it's so funny how shady all of these people are. And you know what's even better about this is it's all coming to light. So like everybody is going to know about this. It's no longer going to be a secret. There is no more secrets, no more hiding, none of that. It is all going to be out in the open. My big concern is I'm wondering how they're going to like manipulate it to the American public, because I don't think that they'll just be honest. That's not, I guess, in America's best interest. However, if the Fed is complicit in this and they are trying to help us, I'm going to leave it alone, whatever. I don't care. As long as, I don't know. Yeah. But they definitely need to put all these fuckers in jail. They do not deserve to be out in this world. Because, like I said, if that was me, my ass would be in jail super quick. So they all need to take responsibility for this. I seen a tweet by Dr. Parik Patel. I don't know if y'all know him, but he's super funny on Twitter. And he said that if GameStop reaches like $1,000 a share or something, he's going to buy Goldman Sachs and rename it Ball Sachs, which was hilarious to me because that would, I swear to God, if that actually happened, dude, if he doesn't, I feel like all of us apes should totally buy it out and totally do that because that would just be amazing. I swear to God, I'd pitch money for that. That would just be the best thing of the year. So yeah, it'd be funny. The thing is, there's going to be something done about it. There better be. There better be. I don't think it's okay at all that they've been... I literally went so far as to add another major into my major because I am going to make sure that I am in a position to fight this and make everybody aware of it and be in a position to be able to change policies. So, yeah, I really just... I don't know. But I'm so excited. I don't know... I know, Paul, I know you checked out the video, but Sky Trader, did you check out the video I posted with CSNBC and Tim Seymour saying basically that he believes that they are naked short selling the stock, and then like in the background you could hear one of the female like anchormen saying naked shorts, yeah, and then you got to see her face, it's hilarious. But anyway, so that was confirmed. I have a feeling on Monday is going to be Moon Day. I'm really excited about that. Also, DTC Rule 003 has kicked in. Investors, hedges must complete or settle their security transactions within 2 business days. Melissa Lee said it. Good. Within 2 business days. Huh. I wonder if that's what the DTC... Let me Google this. DTC Rule 003. I remember I read something earlier about it on Reddit that there was some kind of issue, like a last minute change with the rule that did not sit well with the apes. Let me see if I could find that thread. I think it's honestly on the front page of Super Stonk. Let me go see. And then I'll share it here and we can go through it real quick. Because that was interesting. What are you where did you see that on CSNBC SkyTrader? Expose them on social media. Dude, I already did. I tweeted everybody I could think of. Tweeted the SEC, every branch of the SEC. I sent emails to all of my representatives, including my governor. So we're going to see. I doubt that anything will get done. I'm sure they're sick of me emailing them, to be honest. But we'll see. I mean, if the Fed's already, you know what I'm saying, acting on it, then hopefully we'll be good. I don't know that I trust the Fed, to be honest. Let me see if I can find r/superstonk. Okay, I'm gonna find this post real quick. I just seen it today. I know I seen it today, like a little bit ago, like probably right before I got on here. Reddit found the video, by the way. Of course, it's amazing. It's like literally on the front page like 62 times now, so it's amazing. Hold on. Okay, this meme is funny. I gotta show y'all this real quick. Hold up. Alright, hold on. Let me add a window so you guys can see my screen. Okay. And then, oh man, I hate when this happens. Okay. Alright. I gotta wait for it to like load. I don't know why it takes so long for the window thing to load. But while it's loading, I am going to look for that article. Hold on. Let me just Google DTC 003. See if I can find it. Let me sort it, I guess, by new. Posts from today. Let's do past 24 hours. Nope. Ooh. Hold on, I just found another cool, interesting post. I swear I seen something about Rule 003. That there was some kind of issue with, like, they can, like, halt the stock or something like that. Suspend trading. Oh, it wasn't that interesting. It was a meme. Okay, hold on. I'm looking for this 003. Hold on. God, I wish this was easier. I wish I would have commented on it or something so I could at least find it. Alright. Very frustrating. Okay, let me just go to r/superstonk. Superstonk. And see if I can find it. Alright, let's see. Can you guys see my screen yet? No. Okay, hold on, let me see. God damn. Still can't do it. Alright, let me go to YouTube. Live stream, see the comments. Okay, investors, hedgies must complete or settle their security transactions within 2 business days. Melissa Lee, she's the girl from CNBC, right? Expose them on social media. Stock Twits is where I found it. Where you found what? The 003 thing? Copy and paste. They also have a chill freeze list that can make the borrower and seller agree to the naked short transaction and extends additional time before the naked short can be returned without fines. Well, Thursday, AMC was halted because it tripped a circuit breaker. It wasn't because, like, anybody, like, illegally halted the stock or anything. It hit a circuit breaker. Whenever stocks go up too much, too quick, it gets halted. And then if it goes down too much, too quick, it also gets halted then, too. It's, like, completely normal. It's a part of, like, the market. Which means they can warehouse it till they are ready. Yeah, where'd you get that? Because that's what I read earlier. Where'd you said stock twits. I don't know what that is. I have no idea what stock twits is. Oh my god. Hold on. Very frustrating. Hold on. r/super stonk. Can you post that in the comments if you can, SkyTrader? Alright, I also wanted to show you guys this too. Hold on. Let me get this goddamn shit on my screen. Hold on a sec. It should not be this hard. But yet it is. Let me remove it. Hold on. Just remove it and then add it again. Window capture. Okay. God, it's still not there. Alright. Alright, let me see if I could just share my whole screen. Display capture. Oh gosh. What's happening? Alright, sorry about that, guys. Small technical difficulty, but I did get it. Oops, I meant to shrink myself. Hold on. There we go. Alright. So let me show you what I was trying to look for. Oh, I haven't even found it yet. Hold on. This is interesting, though. Citadel's threatening to sue people for exposing their crimes on Twitter. Imagine if a bunch of apes tweeted this and tagged them. It'd be hilarious. But, here, we can look at it real quick. I already seen it, but... It says, an attorney from a hedge fund this morning ordered me to delete a post or they would sue. This is for stating that creating synthetic shares is illegal per SEC law in firm shorting AMC. Has been trading in dark pool exchanges per FINRA reports with 5 times the AMC float. This is the sign you need. You need to try to be aware of this. Citadel will try to stop the squeeze with the appearance of fake covering, bringing short interest down. They will use synthetic long shares by the use of writing calls with an options loophole. This happened to GME, evidence below. We already knew that. Well, I've known that for a while. But, still. Alright, now let me see, because I know this shit was on the front news. Ha, look at this. The face you make when you confirm illegal naked short selling on live TV and also realize doing this can get you pinned as the catalyst. See, it's all over their front page now, so it's good that Apes has seen it. At least the ones in r/super stonk. I want everybody in the world to see it. Alright. Hold on. Look at me. I'm the catalyst now. How fucking funny. Huh. Oh, this is the dude I'm talking about. Dr. Parik Patel. He's fucking amazing. I love him. He's hilarious. Alright. I'm literally trying to find... Oh yeah, this was interesting. I did see this earlier this morning, and I forgot to mention it. Bank of America basically said that they're done reporting on GameStop, and like you can't rely on their rating of it because they don't know anything about it. Basically, like fundamentals aren't driving it, so they got no comment on it. Alright, well this is interesting. I didn't read this yet, so I'm going to read this real quick. So bear with me, guys. I don't know if I mentioned this, but my bank is Bank of America, and that concerned me a lot because I do know that they are like the bank that holds a lot of Citadel. So it really concerned me, the fact that my money could potentially be gone. So I did call them to see how much my account was insured for, and it's only insured for $250,000. So I definitely would suggest if you have more than $250,000 in your account, that you move it immediately. Because if you lose more than $250,000, it will not be covered. Okay. Alright. Alright, let's see. Alright. Note that this is... Oh, fuck. Why do I keep doing this? I hate this computer. This is why I don't like using a computer. I like my phone. Okay, there we go. Alright. Too long didn't read. It's possible that Bank of America is holding the biggest bag in the GameStop saga. Okay, hold on. Let me go read comments real quick. Alright. Let me read these comments real quick before I start this. Copy paste, blah, blah, blah. I already read that. Thursday they held at AMC, which means they can warehouse it till they're ready. The video we watched was found on StockTwits. The link above is copy and paste. I didn't see a link, Sky Trader. Google it. They show candle chart and people post on as well. Yes, I got the link. LOL, thanks. Oh. I don't think you were talking to me. They're trying to shut us down. I see you now. LOL. I saw that too. It's all over StockTwits. I gotta go and walk my dog. The 2 links are there. Just be careful. They're everywhere. I'll be back. Okay. That's what's up, ugh. I can't speak. God. Sky Trader. Alright. So too long didn't read. It's possible that Bank of America is holding the biggest bag in the GameStop saga. Note that this is just a theory, and they're not advocating for anyone to do anything with their Bank of America accounts. Just some information that they found and felt an obligation to share, and they are not a financial advisor. So, hold on. One sec. Let me make sure the screen is good. Oh, I didn't realize my face wasn't on there. One sec. What the heck? There we go. Oh, really big. Okay. Oh no, that's not what I wanted to do. I wanted to shrink me. Okay, and then let's make this bigger. Alright, there we go. Alright. So, this is just a theory, blah, blah, blah. If you owe the bank $100, that's your problem. If you owe the bank $100 billion, that's the bank's problem. Funny. Alright, so it says, good afternoon, apes of the world. For the past couple of weeks, I've been digging into reports and news articles looking for evidence to connect Bank of America to the naked shorting situation and to postulate who might be holding the bag at the end of this saga. Now, I'm still new to building DDs, and if I'm incorrect, please forgive me, and I will try my best to fix this article. If anyone has any additional information to refute or support my claims, they are welcome, as it's the best way to find the truth. I would also like to thank user Alert Piano 341 for their considerable help and hours of research. I won't even touch that their building is always lit up on weekends and holidays. Veterans Day? Really, guys? And they were just one of the trading platforms that restricted trading in January. Ooh, I didn't know that. Okay. Okay, I'm busy right now, honey. So the supporting evidence is the $15 billion bank bond. On April 16th, okay, when I'm done, baby. On April 16th, Bank of America issued a $15 billion bond. Now, given they had an extremely strong quarter, why would Bank of America need the additional collateral? Bank of America needed that $15 billion bond for insurance. Watch this video at the 1:30 mark. Okay. Let's do this real quick. Alright.
Our digital platform, 40 million consumer customers using in all dimensions, and what we're seeing is well over half of our sales are. We'd expect to.
Hold on, baby.
Assuming we get through the stress test, which is in a process, and I'm sure we will, and the new rules come in, we expect to increase our dividend and increase our share buybacks because, frankly, it's simple. We're making good money, doing a great job for our customers and a great job for society, and therefore our shareholders ought to benefit too. So that's what we'll do.
All right. So, assuming we get through this stress test. Oh, dang. I could have just read that. Anyway, I can't find one other article or media post about the liquidity test anywhere. And this is the CEO mentioning it in an interview. It was on his mind. Well, there definitely was a liquidity test for sure. I did see something on it a long time ago when it was actually happening. Alright, so the Citadel links. So the market maker has a special exemption that allows them to naked short the securities for the sake of market liquidity, and they classify them as securities sold but not yet purchased liabilities. Market makers have been fined for naked shorting before, but nothing has ever really been done to curb it, and the fact that we have two companies with expanding balance sheets now show that it's being abused right now. Citadel specializes in option naked shorting, and because of GME, they have an ever-expanding bag of shit. Their securities sold but not yet purchased went up to $57.506 billion this year, with $32.386 billion of it in options. To recap, Adabit told us the liabilities are valued at fair value, and this will be an issue for Citadel in the future. I think it's going to be an issue for someone else as well. Here's the liabilities at fair value from December 31st, 2020. And then it says notes from the financial statement. Well, let's look at their liabilities real quick. Damn, that's a lot of derivatives. Wow, they have a lot of derivatives. Hold on one sec. Okay. So here we go down here. Hold on. Notes from the financial statement for Susquehanna and Citadel. The clearing and depository operations for the entity's securities transactions are primarily provided by Merrill Lynch, go figure, and Goldman Sachs, go figure. On December 31st, 2020, substantially all of the securities owned and securities sold not yet purchased, and the amount receivable from and payable to clearing brokers reflected on the statement of financial condition are securities positions with the amounts due from and to these clearing brokers. The securities of these clearing brokers serve as collateral for the amounts payable to such clearing brokers. The clearing brokers have the right to sell or repledge this collateral, subject to the clearing agreement with the entity. And then it says Susquehanna's note makes it perfectly clear that the asset and liability are just on paper. The clearing broker can just sell their shit when needed. Let's see what Citadel says about its prime broker. The company has concentration risk with respect to its derivative financial instruments. On December 31st, 2020, BAML serves as clearing and prime broker for 96.69% of the company's net derivative assets. See Note 8 for discussions of credit risk and risk management. The company attempts to manage the risks associated with its derivative financial instruments along with its speculative investing activities in cash instruments as part of its overall risk management process. The credit risk is the risk of losses due to the failure of a counterparty to perform according to the terms of a contract. Since the company does not clear all of its own security transactions, it has established accounts with other financial institutions for this purpose. This can and often does result in a concentration of credit risk with one or more of these institutions. A substantial portion of the company's options clearing and financial activities are with Bank of America, Merrill Lynch. Go figure. BAML. Ha. Okay. Okay. Bank of America Merrill Lynch, or now Bank of America, is the prime and clearing broker for 96. Oh, why do I keep reading this whole thing when she just summarizes it for me? Alright, something to consider. Virtue Capital Annual Report. They could note that the payment for order flow more than doubled in 2020 with the rise of Robinhood. What do you think about Citadel's payment for order flow? Virtue is a public traded company, so we have their expense data. You will not find it for Citadel, but Virtue and Citadel are competitors. This article says that Virtue does 9.4%, while Citadel does 13.4% of the market in December of 2020. So if Virtue is paying $758 million for order flow in 2020, Citadel is paying at least $1 billion. Okay, I remember seeing somewhere that there was an exact number that Citadel is paying for payment for order flow. I can't remember if it was in the Senate hearings or somewhere else. It might have been in the Senate hearings. But it is a substantial amount. Yeah, I do believe it was in one of the Senate hearings. Anyway, Virtue Capital payment for order flow. Then they could look at Citadel's debt. Okay, I kind of want to get to the point now. They issued $1.653 billion loan to Citadel, which they also recently raised a $15 billion for their bond. Wow. A new hire. Alright, so there was a new hire, David Kim. David Kim was the head of equity client solutions at Bank of America and was recently hired by Citadel Securities. Okay, I knew all this. Look for the usual suspects. I speculate that Bank of America has also contributed heavily to the naked short selling of the so-called meme stocks. In an article recent as 2018, it's been documented that Bank of America has paid the most fines out of all the major players since the 2008 financial crisis. It would appear that the rules simply don't matter to them. They just get caught the most. Goldman Sachs should be fucking first, and so should Credit Suisse. They are... Anyway, in recent 13F filings on Whale Wisdom, you can see that Bank of America does hold decent-sized put positions on GME and AMC, as holding these put positions are a legal loophole way of holding a short position and resetting at FTD. I believe it's possible that they took short positions against these meme stocks. As both organizations would benefit from colluding an aggressively short position, they would drive the price down and both mutually profit. That's insider trading. Collusion, I guess. The recent Bank of America Q10 quarterly report. I decided to do some digging when I was looking through. By the way, this right here, the colluding stuff, there's no proof of that. So for now, that's just speculation. The recent Bank of America Q10 quarterly report. I decided to do some digging, and when I was looking through cash flows on their most recent quarterly report, a figure under trading and asset liabilities, I found this gem. The net change in cash from derivatives. See, I already knew all this. I already looked up all this. Well, this part's interesting. The Roaring Kitty. It seems that our beloved Roaring Kitty knows something's up with Bank of America as well. In his recent Twitter post, he showed a scene from Baby Driver, a great film. Check it out. And it would appear that there had been a GameStop logo inserted just above the Bank of America ATM. Currently, hundreds of Bank of America locations across the U.S. are currently closed. It was definitely sus. To my understanding, some of these locations were being boarded up due to the trial of George Floyd. This was very strange, as some of these banks were being boarded up after the verdict of the trial, and it appeared no riots would happen. I understand that with the shift to mobile online banking, there is less of a need for physical locations, but it does facilitate about 1/5 of all locations being temporarily closed. I did a sample of several states and came across 1/5. I wasn't about to spend a day, checking all 4,600 locations, but I welcome someone else with more time on their hands to take a look. I can tell you for sure, my branch was not closed, but it's also not an in-person branch. It's literally all virtual, and I did check it out to see if it was closed and boarded up. Bank of America analyst shitting on GME. Okay, we already know this. I'm just going to skim this. I can read really fast in my head. And I'll let you know if there's anything important. Alright, we'll just read the conclusion. Based on all the evidence provided above, I asked questions. Who else could be the biggest bag holder at the end of all this? If Archegos is a much smaller hedge fund and contribute to a $10 billion in losses to Credit Suisse, then I speculate that the losses from the margin calling of Citadel and Susquehanna could be magnitudes larger. If you also consider the short selling of securities from Bank of America itself, it's entirely possible for $100+ billion in losses. Let me know what you think. Again, shout out to you Alert Piano 341 for their help and contributions. If someone could get me some Bloomberg shots for a few major banks, that would be great. Ideally, Bank of America, JP Morgan, Goldman Sachs. Please and thanks. Interesting. Very, very interesting. Huh. Yeah, my Fidelity account is insured up to 1.5 million, and I have 4 of them, so we're good. Well, I don't know. With losses like that, I might need to open a few more. That wasn't the article I was looking for. I'll try and find it and show it to you when I see you again, or make like a small video about it. What's up, 82 Pow? I saw it too. It's all over. Blah, blah, blah. Just be careful. They're everywhere. Bigger than we thought. When you can, you need to check out Lou vs. Wall Street privately. Look, I gotta go. I gotta spend some time with the wifey. She has been so patient with me the whole time this started. Be safe. Thanks, Paul. Thanks for coming. You too. What's up, Rack? Yeah. I think that I'm gonna get off of here too. My kid really, first of all, it's midnight here, and she's still awake. She is waiting for me to do, what are they called? Sparklers. So I'm going to go hang out with her and do some sparklers, and get that all done. But, thank you guys so much for listening to me and tuning in. What's up? Not much. Just uncovering some bullshit that these hedgies have been doing. You gotta watch the beginning of the stream, Rex, when we go over this video, because it's crazy. But yeah, I'll see you guys. I don't know, I keep saying on Monday, but I keep coming back, so I don't know. I'll see you guys when I see ya. But yeah, I'm gonna go hang out with her and do these sparklers with her. But thanks for coming. Like, share, subscribe. It says that 63% of the people that watch me are not subscribed. So if you're watching and you're not subscribed, subscribe, please. Alright, well, I will see you guys probably tomorrow. I don't know. Once I uncover some more research. So, everybody, have a good night, and I'll see you tomorrow. Peace.